Hey guys, Steve here with the weekend update for July 26, 2014. Just wanted to take a quick look at the market and we'll go through our positions, go through the watch list and see if any trades had triggered from last week. I don't believe off the top of my head that there was anything, but let's take a look through through the watch list and just verify. So like I said, S&P 500, we're basically coming back, possibly testing that trend line that we had developed after this breakout on, I think it was Wednesday. Thursday, Friday, 2 small days down. Friday felt a little bit worse than I think it was, but in the grand scheme of things, it's really just coming back to test the trend line at this point. The NQs, the Nasdaq was down a little bit more, or actually a little less, which is surprising with Amazon's earnings. But basically that came back, tested the top of the box, which was previous resistance, possibly coming back in again, testing the trend line and potentially moving higher. And the last one being the Dow, down 112 points on Friday. This one really is just going along the same trend line that we've talked about. Still in a consolidation area, but with the other two indices breaking out, this looks like the laggard for sure, down towards the bottom of the box, bottom of consolidation, and really at the trend line where the other two aren't. So like I said, that's really how the market's shaping up. Nothing too earth-shattering at this point. Really just some consolidation, some Friday selling. I don't really read too much into it. Like I said, until we start to break some trend lines, I still believe the trade is higher. So we'll go through our positions real quick. So the first one being Apple. So as you can see, we actually had 4 of the 10 positions I think we have on that were positive on a fairly bearish day, down day, which is always a good sign. Apple, came back, moved sideways after the earnings pop. Now potentially moving to new highs. It's at a new closing high. So right now our stop remains 93.09 with this trend line very well intact. So we can be really confident now that this 93 level should hold, and if it doesn't hold, that would be a sign to get out of the way, because trend potentially is reversing or moving into a sideways consolidation. Archer Daniels Midland, this is also the free trade that we have had going on for a couple weeks. We had identified, I think it was Thursday, that this potential candle here is called a gravestone doji, meaning that it opened, moved higher, but was not able to sustain the move and closed back towards the bottom of the range. And of course, we got some additional selling on Friday, but again, the selling is really only back into the top of the previous consolidation, so nothing to be concerned about. I'm not too concerned about this trend line potentially breaking, as this is really an accelerated trend line. I mean, it's not a sustainable trend line. The slope is way too steep. Something new that Thinkorswim is putting out is this degrees that you could see here in the box. So it's a 49 degree slope, where if you look at something like an Apple, it's a much more sustainable trend line. I don't know why it's not showing it. There it is. So 28.9 degree. So you can see the difference, 28.9 versus 45 or 49, whatever it was. So much more sustainable slope and trend line. American Tower, again, just grinding higher, still moving along this trend line. We had a couple of selling days. We have earnings coming up on the 30th, which I believe is Wednesday or Thursday. Not sure. I think it's Wednesday. So we'll be on the lookout for that. But we do have a nice gain in that right now. Amazon, the one that the elephant in the room. So let's see what happened here. Reported earnings supposedly were less than expected as far as earnings per share. We're really looking at a huge gap down, much more than I had anticipated. But again, this is why we don't game earnings. It's almost impossible, and we really just we have to react to prices that are current. Can't predict, hey, this is going to go back to 400. I have no idea. I couldn't tell you. But I did tweet out that in order for us to stay in the trade, it had to close above 324, and sure enough, it closed above 324 by a penny. So as far as I'm concerned, we're back in this consolidation area that got us in the trade originally, and our stop is back under this 323 area. So if we start to get a close under 323, then we're going to exit the trade. But for right now, we're back in. This is where our stop was, and this is where the stock retook. So maybe it needs some more time in consolidation. But I'll tell you what, if this thing does not turn around the way we anticipate, it's going to be the first one to get cut for a loss, because there are plenty of other stocks that are moving, and to have our money tied up in something that's not working is not worth it. So I'm sorry, let's go back real quick to Amazon. The other thing I want to just point out, as far as the weekly chart, this came back right to what I would consider to be weekly support, right in this 321, 320 area, as you can see through here. Let's throw a price level up. So that came back and touched the weekly support. So I mean, let's see where this goes. Maybe that's the low that gets us started, but like I said, if it doesn't start reacting to higher prices and start pushing higher into this box and eventually break out again, this is going to be one that we're going to cut. Air Products, this is one we entered on Thursday after its earnings on Wednesday. So Thursday we entered, closed down a little bit on Thursday, but now Friday it actually was higher on a weekday, which is always a good sign. And like I said, once we have this huge volume breakout, potentially moving sideways wouldn't be a bad thing. If this moves sideways for another week or so, and we got over to this like the 4th, 5th of August, in this little sideways to potentially a little downward movement, and then broke out, that would be a very healthy sign for the stock. It's being accumulated, not being sold, and hopefully ready for a move higher. EQR, we talked about it, of course, being up for X amount of days, I think 14 of the last 16, and then we got the huge sell-off on Friday to kind of take away most of that, and right now coming back to this small little consolidation area. So for right now, like I said, trend line is where it is, and we'll see where we can go. But until that trend line breaks, we're in good shape. Fidelity, again, another one that was higher on Friday. Really looking at this little area as a potential consolidation. So it broke out, maybe it consolidates a little bit, moves sideways again for another week or so, and sets up for another breakout. But nothing wrong with the weekly chart. And nothing really wrong with the daily chart. So for right now, nothing to do in Fidelity. It does have earnings coming up on the 28th, which is Monday. So let's see how that reacts and where we go from there. Honeywell has been a disappointment since we've entered. No way to sugarcoat that. As far as we basically entered right here at 96.70. We had a nice move higher for a day or so, and then now we're back down to this 95.50, which is the recent breakout area. So let's see how Honeywell reacts. Maybe it needs to retest this 94.70 area, the trend line. But like I said, we defined our risk. We entered the right size position. So right now 92.79 is our stop in Honeywell. Mondelez basically looking at really just moving sideways. I don't know what's going on with this, but we could potentially draw another consolidation area in here. But with earnings coming up, maybe that's the catalyst that gets it moving. But as you can see on the weekly chart, we had the breakout, which was fairly well above the trend line on the weekly. So, maybe this does need to move sideways until it catches up, until this trend line catches up. But for right now, not really anything going on in Mondelez. And the last position that we're in, which of course is Wyndham, was also up for Friday. Another kind of topping tail that, not exactly crazy about it, but with the action in the general markets on Friday, the fact that it closed higher is a positive sign. So, same thing here. We're really looking at a potential. We were able to move our stops up from the 72.45 to 75.13, and now we're looking at potentially, moving sideways to down to see maybe if we have to test this trend line, or maybe this is going to resolve to the upside and we can continue with the weekly breakout. So that's it for the positions that we're in. Let's get over to our weekly watch list. All right, so we're going to take a quick look at the watch list. Basically, what I did is I went through the list from last week and really pared it down. Not really much to do right now. We have a pretty full portfolio, so we're not really looking to take too many more trades. So instead of adding new ones, I just went through ones that we had already and that were still valid, and we're going to go and move forward with those for this week. So Ace still, as you can see, in the consolidation that we identified. It's been in there for a while, really basically consolidating right above weekly resistance. So I'm looking at the trend line there and a resistance area right through here that it's right above, consolidating. So a breakout over 105.50 would be a good entry, and then we'd be able to have our nice tight stop at 103.35. Anadarko, this one again consolidating right along the trend line, bounced off the trend line. We had a brief breakout on the 15th or the 16th, but then what happened was it came back into the range. Now it tried to push through again and failed. So let's see how this one reacts. But again, over 111.86 is our entry point on that. And as you can see on the weekly chart, there's definitely a fairly accelerated trend line on the weekly right after this breakout. Consolidation area came back, is now testing the top of that breakout. So like I said, we're looking for that push over 111.86 as our main entry point. BDX, again, this one, same thing. I mean, we're looking at consolidation, really looking for a breakout over 120.26. And again, on the weekly chart, we have this nice trend line that's pushing everything higher. We're right back at that trend line. So, if it doesn't happen this week, that we get some higher prices, then this may fail at these levels. Baker Hughes is really moving higher after this nice weekly basing for about a year. Broke out, came back, tested, and is now moving higher. So like I said, we're really looking at the breakout from this range here over 75.42, and now we're starting to get into the point where earnings are starting to pass. So these trades, if they trigger, we don't necessarily have to worry about the whole 2-week rule for earnings. So this was one that we just had earnings last week. So for right now, that one is over. What was it? 120.22. I'm sorry. What are we? BHI 70. I'm having a rough time here, guys. I'm sorry. 75.42. So over 75.42 is the trigger in BHI. Broadcom was one that I was debating if we were going to keep it on the list or not, but it's still valid, so I'm going to keep it. It had this huge move on earnings, closed lower, really got sold off after earnings. But, at the end of the day, we're right back into this consolidation area, and we're right sitting above weekly support. So for right now, Broadcom over 38.70 is our trigger for an entry, and then we would be able to keep a tight stop. ConocoPhillips is one I'm really looking forward to trying to get into. Of course, earnings are coming up, which is kind of throwing the whole plan off a little bit. But like I said, earnings coming up on the 31st. I really like this setup as far as what we were looking at on the weekly chart. Really consistently, almost every week, moving higher. Finally getting a little bit of a pause to develop this consolidation area. As you can see, it's really sideways movement, not necessarily downward movement. So there's not a lot of people selling, but there are probably a lot of people accumulating in this area. So a breakout over 86.50 is the trigger on this one. And then that would be a great addition to the portfolio in the energy sector, which I don't believe we have anything yet, and a nice strong stock. Estee Lauder, again, sideways consolidation after a weekly consolidation. So here's weekly. Now we're getting daily consolidation. Over 76.95 is the breakout. We have a trend line running through, something like that. So, if we got a breakout over 76.95, our stop would actually end up being this 74 area. So with a 1% yield. So like I said, and maybe may have been out there before. I know I did a post on it when I originally started the blog. But the reason that I come up with these stocks and one of the filters I have is a dividend yield. And the reason there's a dividend yield is because I like to get paid to wait. Some of these stocks, in my personal account, I just actually exited Caterpillar after almost 6 months. So during those 6 months, I got obviously the capital gains in the stock, making higher prices, but I also received dividends for the 6 month time period that I was in the stock. So that's, like I said, that's definitely one of the criteria with trend following. Is it's not something that you're going to get in a stock one day and dump it the next day. We're going to be in this stock for 3, 4, 5 months, or at least that's the intention. So why not get paid on the backside of it to just hold the stock? So that's one of the reasons that these stocks are in our watch list, and that's one of the reasons that I am willing and very easily would dump Amazon, is because that does not provide us a yield. That was strictly a growth and momentum play, and if it's not going to follow through, then we don't need to have it. We don't need to get fixated on one stock. This is about making money and not making friends here. So anyway, I digress. Back to Eaton. Eaton is consolidating. As you can see, we had the weekly breakout. Now we're looking at this daily consolidation in here. Couple topping tails back up to this $80 level. So again, over $80, that's a great place to get long. We would be able to define our stop fairly easily. So that's the important part. Defining stops and limiting risk, initial risk. Same thing with Expedia here. Expedia is actually still in a weekly box, but this consolidation area is right below resistance. So if we were able to get a breakout over 82.14, our stop would be able to be 76.23, $6 on an $80 stock. It's almost 7 or 8%. So position size would be good, and we'd be able to really define that risk because we have a good point of entry and a good reference for our stop. FedEx, same thing, still moving sideways after the weekly breakout. Earnings have passed, but FedEx could very well move sideways. Sorry. Why is this not working? There it goes. So, maybe that's the trend line in FedEx. Who knows? So maybe it wants to move sideways till it hits that line. But for right now, over the those highs of 154.35 is our entry point. Corning, same thing. We have a nice weekly consolidation, breakout on the weekly. Trend line on the daily is pointing to higher prices and consolidation. So over 22.37, we'd be able to actually put our stop right here at 21.47. So we'd be a 90-cent stop on a $20 stock, which is extremely tight. But that's the price. I mean, that's really, we don't have to give it much more room than that, because the fact is, if that price level breaks, then we're no longer in an uptrend. We're making lower lows. Genuine Parts. I'm sorry, no. Green Mountain Coffee. Weekly chart, moving higher. Daily chart, consolidating still. I still think this comes back to this 112 area, and that's really where it's going to bounce, where the bottom of the consolidation area and the trend line meet. I still feel that this wants to come back, test, and then move higher. Genuine Parts, that one actually broke this mini trend line that we had, so we'll take that off. But as you can see on the weekly, we're in a weekly consolidation, but we are starting to break the weekly trend line that we have drawn. So we'll see how that plays out. But the 83.80 area is something that really needs to hold for this to remain a valid trade. IVZ is broke out on the weekly, as you can see up here. And I always look at the weekly first. Weekly breakout. Now we're moving sideways on the daily. So again, we'd like to see that break over 38.70. And then I'm looking at a trend line, something along these lines here. So, we come back into this 37, maybe we bounce, but at this point, that's the valid trend line that I see. Nordstrom, moving sideways, nice breakout out of the weekly on earnings, big gap up, sideways. So, let's see how this, if this can get some more momentum to push over the $70 level. I'm looking at a trend line, something along those lines there. So this 67 area really becomes a critical area for that stock. Lincoln National, we're really in a weekly consolidation. Now we have a daily trend line higher. Consolidation, a break over 53.07 would be a great entry for the trade. Stop right under here at 50.68. And earnings coming up on the 30th. So for right now, probably not a play for this week, but for future weeks, that's something to look at. Macy's, again, same as a couple of the other ones we've looked at, really moving sideways. It broke through this weekly trend line by time, not price, so which is okay. It didn't come back down, crash through, and break the trend line. It's just moving sideways, picking up steam, resting. And let's see if we can get a close over 60.19. And like I said, if we do, then our stop would be able to be over here at 56.43. MetLife, kind of breaking the bottom of the box. So we have a nice weekly breakout. This daily breakout looks like it may eventually, this daily consolidation may eventually fail, but earnings on the 30th, so again, maybe not a trade for this week, but one to keep in the back of our head for next week. McGraw-Hill, this is a perfect example of why I use closing prices. So not that it advanced astronomically, but the fact is we have a nice weekly consolidation, a breakout. So now we're in a daily consolidation. And what happened when it reported earnings? Well, it looks like it reported earnings. Maybe it didn't report earnings. Anyway, what happened with this day, here's our consolidation, was we went down, we opened here, went all the way down to 79, and we closed at 81. So raise your hand if you were somebody that got stopped out at 80 or 85, 80, 50, maybe you put the stop down here at these highs, and you got stopped out right at the bottom, only to watch it snap back in your face. Raise your hands. Guys, I was one of them. I would have been there selling this stock, getting stopped out, getting frustrated that it was closed higher. There's no need. I mean, intraday is noise. Just worry about closing prices, and not only will your mind be clearer, but you're going to save your heart a lot of rough days. MMC, this was one we had a breakout on the 24th. We didn't take the trade because of earnings coming up. Friday, sure enough, it was like the breakout never happened. So we're back into that box. We're really looking for now, I would say, a close over 52.65 would really be the area we would need to get into. But again, with earnings coming up, Probably not one for next week, but we'll keep it in the back of our head. 3M moving sideways still. Let's activate that drawing, slide it over. So over 145.65, maybe 146 is still our entry point. You can't not like the stock. I mean, look at the weekly chart. It's coming back in to test trend line, potentially test the trend line, move higher. So over 145.65 is going to be our entry, and that looks like it would be a very good entry based on what I'm seeing on the weekly chart. Merck, again, same thing, really moving sideways, kind of breaking the trend line a little bit. I guess it kind of depends on the weekly, how you decide to draw the trend line. But on the daily chart, let's just slide this over. We're coming in, and again, this would be, if we can get a break over 59, which would be huge, that would be a great entry, and an entry into a healthcare name, which I think we may have one or two in. Let's see. Actually, no. We have no trades in healthcare. So that would be another one similar to the ConocoPhillips that I would love to enter based on the setup and based on the portfolio diversification. Plus, you're going to get a 3% yield, and in Conoco, you're getting a 3.4% yield. So you can't really beat that. If you have high movers with yields like that, that's like a double-edged sword. You can't really get a better situation. Marathon, kind of breaking out. So this would be one that we potentially could have taken a trade in on Thursday or even Friday, or for that matter, even Wednesday. But we have earnings coming up. So for right now, that's a pass. But you could see on the weekly chart, we have this nice long weekly consolidation, finally getting a breakout. So this thing's going to have some steam behind it if it can stay above this trend line, I would say. I would say it needs to stay above this lower trend line. This upper trend line would be one that I would use for a more aggressive trader. But like I said, for right now, with earnings coming up, it's a pass. PKI, this one still moving sideways. We got our breakout from weekly consolidation. We have this nice trend line on the weekly chart. Looks like it may be coming back in to test and a break higher. Again, earnings coming up on August 1st. So for right now, that's a non-trade as well. Prologis, this one's not necessarily near 52-week highs or even all-time highs, but this one has really been moving sideways for a long time. I mean, really since February. So if we can get a breakout and we can get some continuation, this one may have some legs to at least test this 45.52 area and then see what happens when we get up there. Public storage, again, we had the breakout on Thursday, closed lower Friday. We did not take the trade on Thursday due to earnings. So for right now, we're in a holding pattern. Probably again, it won't be this week that we will get a trade in this, but for next week. But as you can see on the weekly chart, we're really sitting right below weekly resistance. So we get a breakout in here and we got to push higher. That one can potentially have some legs to it. Sealed Air coming back just to test the middle of the box. That one may want to even test the bottom of the weekly box around this $30 level. UMP, this is my other one that I really want. So let's say Conoco. It was Conoco, Merck, and now UMP. I mean, you just can't get a better setup. You can see how here it consolidated in the weekly, came back to test that trend line. This one, it could very well do the same thing. Maybe it goes sideways for another year. Who knows? But looking at this trend line that we have here, that's a great trend line. I mean, to have almost, what was it? Maybe you count on two hands. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 of the last 10 weeks out of the last almost 9 months, the stock was down. 10 weeks. I think that makes a big dent in your portfolio. that can put some serious gains in your pocket. So this is one, of course, past performance, not indicative of future performance, but the setup is there. Everything is lining up. Earnings just passed on the 24th. So if we can get a close over 103, and we have industrials in the portfolio, we have Honeywell, and then one of the reasons we haven't taken trades in Lockheed Martin and Northrop Grumman is because Honeywell and those are very similar. An industrial, this is a railroad. This is something that I would want to definitely enter a long position in if everything lines up and sets up properly. So again, over 102.25 is our entry. UPS, similar to FedEx, is really just sitting there. We're kind of getting this ascending triangle pattern. So we have some horizontal resistance moving higher. So let's see which one's going to give first. Maybe the stock can push over this 105 area, or maybe the trend line is going to fail and it's going to start trading lower. But for right now, our alert over 104.28 is our entry. Two more here, guys. Last one, or VFC, second to last one. VFC, sideways consolidation. We're looking at a trend line coming through here on the weekly. So we're starting to break the trend line by time, not price. So again, that's okay. Tested the bottom of the daily box, is now bouncing higher. Over 63.85 is a good entry point. And we would just have our most recent low would be our perfect spot. English. Perfect spot for a stop. The one thing that does concern me is I'm looking at now a descending trend line. We got a lower low, right? So if this can turn around, and now maybe this is now becoming more of a short than a long. So we'll see how that plays out. Last one, ExxonMobil. ExxonMobil moving sideways. We had the breakout on Wednesday, Thursday, closed lower Friday. Earnings on the 30th, so this one probably is not going to be in play this week. But as you can see, it is making higher highs, higher lows. Weekly chart coming right back into trend line. We're above weekly resistance, the previous resistance area. So let's see how we do after earnings on that one, and then maybe that's another entry. But like I said, right now, no new positions are triggered. Existing positions look fine. 3 on the hot watch list that I have in my mental head here is Conoco, Merck, and UMP. So those 3 are the ones that, even for my personal account, those are the 3 I want to be in. But we have to watch because, we are pushing our margin. We're at about 50%, and we get about 200%. Or another 100% over what we have. So we actually get like 200,000 in the model portfolio. We've used 150,000 approximately. So we have room for about 3 more positions. I want to make sure those positions are worth using the margin for. And then, we'll see how it plays out. That's it for today, guys. So if you haven't already, please follow me on StockTwits, Twitter, and Google+. And subscribe to the YouTube channel. And if you like the video, please give it a thumbs up and leave some comments below. Thanks for watching. See you next time.